Wonderful. Welcome back to Trading Penny Stocks with HenryCraig. Let's continue to build a trading plan for VNUE. So in the last video, we started with our trading template. And as I was discussing before, I designed this trading template by watching Timothy Sykes' trader checklist and his 2016 videos, which were quite analytical and informative, and actually dive into various strategies and various ways of evaluating penny stocks prior to trading them and after trading them. So for VNUE, we put in the ticker sign here, VNUE. We input the price of the stock, 0.0268, and we notated the day of trading, Tuesday, January 22nd, 2021. Over here in this box or window, we identify the most recent catalyst. Catalyst number one was a company update to shareholders, informing them of the plan going forward for 2021, and just reminding them of the setbacks caused by the corona pandemic in 2020. They also had a partnership deal in regards to music development, and they had a contract with an artist. And all those catalysts present the potential for increased volatility in price and volume. Now, in the next window for indicators, we identify that VNUE was a recent runner. All right. We identified the volatility or the price action. So on the 21st of January, Monday, 21st of January, the price action was 33.8% at the end of the day. In other words, the VNUE increased or closed on the 21st at 33.8%. All right. It's not a first green day. If we take a look at the chart, we'll see that VNU is a multi-day runner, spiking for 4 days. 1, 2, 3, 4. Even though the second day it ended red, it had a higher high than the previous day, and the next day, as you can see, the stock even went higher. All right, so this is not a first green day. It's a multi-day runner, and the overall chart pattern that we identified on the previous video is that it's a stair stepper. Here to the further left, you can see that it's a previous runner spiking for 2 days. Then the stock became choppy, consolidated for several months, and then right here in the middle, spiking for 2 days, consolidated, and then now to the extreme right, the most recent time, which would be the 21st of January, 2021, the stock has spiked a 4th day after running for the previous 3 days. So going back to our template for creating a trading plan, and I'm just revising what we did on the previous video so that our new audience can be brought up to current date. All right, so on this template, all the areas that are highlighted in yellow, orange are the factors that I'm focusing on. And as I go through this template, I use green to highlight the indicators, the catalyst, the chart pattern, all the important factors that the stock, in this case, VNUE, has displayed. So moving on So I record the volume of the previous day, 28.14 million shares traded on January 21st. All right. We won't take a look at these boxes over here for zone of resistance and zone of support, because eventually we'll capture those as we look at breakout levels and support levels. All right, moving on. In this section, market environment, you can give an overall view of the market and also input whether the Dow, NASDAQ, S&P 500 or the Russell 2000 are up and down and by how much. Shares outstanding, 1.15 billion, and the public float is 1.1 billion. We also try to identify, is this stock ultra float or low float? For me, a low float would be, say, 10 to 15 million shares in the float, and ultra low float would be below 10 million. Let me revise that. Actually, the ultra low float stocks for me would be anything in the float less than 5 million. And then low float would be from 5 million to 15 million for my analyses. All right, moving on. We identify whether on the previous traded day, VNUE had a gap up or it gapped down. How many days is VNUE spiking for? 4 days. If we go back and take a look at the chart, it's a multi-day runner. All right. After this big pullback here for 2 days on the red candle, right? Support was reached right here, having a first green day and then now spiking 3 additional days. So running for 4 days. All right. And over here, type of breakout. And if we go back to the chart, I have 11-day, right? That's a type of breakout over the previous high. And just to quickly show you how I identify that. Okay. So if we look on the traded day of the 21st and compare it with the previous high, which was 0.0144 on December 31st of 2020, and count the days between, it will add up to 11 days from December 31st, 2020 to January 21st, 2021. All right. So it's a multi-day breakout above 0.0144. And it roughly took the stock 11 days to get back to that price point. All right, so that's a breakout. Moving on to the next window. What are my chart patterns? All right, as I've identified, or we have identified on the previous videos, this is a stair stepper, and we are looking at the time frame between 100-day and 200-day. All right, long term. And in the short term, is it uptrending, consolidating, or downtrending? In this case, it is uptrending, running for 4 days. And on the previous video, we highlighted other chart patterns that you can look for and see if there are opportunities to trade those, like double bottom, double top, cup and handle, all right? And if we scroll further down, we'll see morning star, piercing line, evening star, shooting star, and so forth. One of the things that Timothy Sykes had designed or identified are various stages in the chart pattern that a trader can identify as ideal opportunity to take a trade. And those ideal opportunity would be based on your trading style and you're set up. On video 4 and 5 of this series, I will discuss further my understanding and takeaway and preference of particular stages in the penny stocking framework. Moving on. All right. Over the last window to the further right for trading strategies, given that this stock has been running for 4 days, I have decided or assume that at this point it is overextended. So the next trading day, which is January 22nd, my trading plan, our trading plan, this trading plan will be based on trying to seize a morning panic opportunity so that we can dip buy where it base and try to capitalize on a bounce. So here I've identified that my trading strategy for this trading plan is to dip buy a morning panic. And Timothy Sykes had identified that this is number 5 in the penny stocking framework, all right, which would be right here. So what I'm trying to do is, our stock has already displayed stage 1, 2, and 3. All right, if we go back to the chart, right? When it started to run on that first green day, that's day 1, then that red day after it had gapped up significantly and then ended red on the day. However, it was still above the previous day's high. So that's significant, right? It ran for a 3rd day and a 4th day, right? So right in this section, these 4 days, the stock has already displayed stage 1, stage 2, and stage 3. So logically, the next stage should be stage 4, right? So I'm looking out for a panic on day 5 of this, of VNUE. All right, let's go back here on the template. So I'm looking out for day 4, and as per Timothy Sykes' penny stocking framework, that should be a crash. That should be the first red day after the stock has run for several days. In this case, VNUE has had run for 4 days. So this plan is being created for a dip buying opportunity, preferably in the morning. All right. So I'm gonna go here. And as I've said on the previous video, repetition deepens impression. So as we go through this template, we are rehashing certain factors so that in our subconscious mind, as we trade, we already understand what we want to accomplish on that particular trade. All right, let's see here. The buy morning panic. And that's the only strategy that I'm taking, right? I could also look at trying to buy support levels, all right? Because if I'm anticipating that on the 5th trading day for VNUE on January 22nd, 2021, that there's gonna be a morning panic, that the stock is gonna crash on a 5th day, I'm trying to identify where the stock will bottom before it starts to bounce, because the bouncing aspect, which is step number 5 in Timothy Sykes' penny stocking framework, is where I want to capitalize on that price increase to secure gains. All right. So I'm also looking out for support level. All right. Just looking back on previous activities in this template, I am looking to reinforce what I've already identified in the chart patterns. I've identified 3 catalysts, right? The stock has already achieved new 52-week high. It's a multi-day, not runner, but breakout, right? Multi-day breakout. Put this one right here. All right. We have identified as a recent runner. We're just summarizing what we have done quickly. All right, gapped up on previous day. It's a multi-day runner. So this is a strong stock. Right. Right. Okay, so let's move on and now determine our entry price and our exit price and our risk versus reward. In general, we want to have a risk versus reward of 1 to 3. All right. So these windows to the left, risk to reward, risk versus reward. And then the window in the middle, position size, entry, and exit. And over to the right is our action plan. Back to the middle is trade execution and outcome. To the extreme left, towards the bottom, defines our trading style or trade time horizon. Let's start off by trying to identify what would be my potential entry level. So let's go to the chart for VNUE. And if we look back to that big candle on December 31st, 2021, all right, the previous high was at 0.0144. All right. And right now the stock is at or ended on the previous day, which would be January 21st at 0.02. All right. So I'm using a educated guess based on previous high as a support level to determine my potential entry level. I'm gonna look at 2 entry level. That was the first 0.0144, the previous high on December 31st, 2020. And the next support level I'm looking at would be on January 4th, 2021 of this year. And it's right where we have that first green day after it had pulled back for 2 days. And then that second day it ended red. So that support level on that first green day, the high of the day, that's at 0.0139. So tomorrow on Tuesday, January 22nd, I'll be watching this stock in the morning. And if it is gonna have a morning crash, I'll be looking for the stock to bottom around 0.0144. That's the high of the day on December 31st, 2020. And 0.0139, that's the high of the day on January 4th, 2021. Right? That's a day that VNU started this run. All right. So if we go back to our template, all right, my entry level right here. Let's go with 0.0139. And what could be my possible exit price levels, all right, for taking profit in this case? Let's look at taking profit first, and then we'll consider our risk, all right? So if we go back to our chart, if I'm taking an entry level at 0.0139, which is the high of the day on January 4th, 2021, that's a day when this run started. I'll be looking to take potential profit at 0.0144, which would have been that previous high, right, coming from December 31st, right? Another point of exit to take profit would be at 0.0154. And that would be the low of the day on January 21st. And if the price action is good and I feel as if I should be a bit more aggressive, a third exit price to take profit would be at the opening price of yesterday, January 21st, which would be at 0.0161. And if we go back to our template, right? Now we have 3 exit price. So we have a range. All right. Okay, once I've identified my entry price and my possible exit price for taking profit based on various levels on the chart, I go over to my risk and reward. All right. And just a minute here. All right. All right, let's go ahead and input these prices. So the first exit price that we have is 0.0144. Second exit price is 0.0154. And the third exit price for taking profit, and that's if the stock is going in your favor, And then what we are going to do is to calculate the difference so we can have a better understanding of what's our risk versus reward is. All right, so if we enter at 0.139 and exit at the first level, that's a difference of 0.005. And then if we exit at let's do this. And let's do. Okay. So 0. Let me pull up this other sheet. And then we'll determine our position size. And then with the other parameters, those should be able to support your trading plan as well. All right, so if I enter at 0.0139 and I exit at 0.0144, I have a reward of 0.005. All right. And then with the other exit level, that's a difference of 0.0015. And at the third exit level to take profit, that's a difference of 0.0017. What's the time horizon? It's a day trade, and I'm aiming for a morning trade. And I've already highlighted this section. It's long. I'm taking a long position. All right. The day of trade right here would be Tuesday. And we are in January. And the day we want to trade is the 22nd of 2021. How many shares I want to take? Let's do 50,000 shares of VNUE. So in the upper box is potential, right? My potential position. I won't know until the trade is executed. I want to take a position size of 50,000 shares of VNUE. I'm buying that. And I want to enter the trade at 0.0139, right? Bear in mind that previously we determined 2 entry levels, so we have a range. So tomorrow I'll try to enter this trade between 0.0139 and 0.0144. All right, those are the 2 support levels I'm looking at. I'll be watching VNUE in the morning in case it has a morning panic, so I can buy it on that crash. Okay. All right. And then below that, you have the actual. So once my trade has been executed, if it's 50,000 shares or less, then I'll put that value in here. And I'll also input what is the value at which I buy the stock. Say, for example, the stock execute at 0.0141. That would be my actual entry price and not my potential entry price based on building this thesis the night before. And then once I exit, right, my trade, if it's on the same day, January 22nd, tomorrow, then I'll put in the exit value here, what it is, what the value actually is, and not the theorized or the planned value. All right, let's remove this because we haven't executed our trade yet. All right. And let me now, okay, so let's go ahead and now consider or evaluate what would be our risk in case this trade does not work out in our favor. All right, so what would be my risk level? If I'm entering the stock at 0.0139 and say there's no morning panic and I'm gonna exit, what would be my risk level? So 139 on January 4th, 2021 was the high of the day. And if the stock goes against me, then I would want to cut my losses at 0.0134 or 35. All right, so let's go back to our template. I did this wrongly, my bad. Exit price, let's see here. Zero, okay, I apologize. I did this template wrong. And I was the one who created it, wow. Okay, so we're gonna put the exit prices at the bottom as the template has expressed. So the first exit price, if I buy at 0.0139, the first exit price would be 0.0144. Second exit price would be 0.01, what did I say, 54? All right. And the other one would be 0.0161. What's my risk level? Let's see here. Okay, so in the exit section, we put in our exit level for the risk column. All right, if the stock goes against me, what would be my exit price? So I can prevent a disaster by taking a small loss. So if I'm entering at 100, if I'm entering at 0.0139 and the stock goes against me, I willing to accept a loss of 0.0004. All right. If the stock goes in my favor, I'm aiming at capitalizing gains at 0.0144 or 0.0154. And if I'm being aggressive, I'll push to 0.0161. All right, let's see here. Just a minute. All right, so we have already calculated the reward difference, right? If I'm successful in my first profit point, I'll make 0.0005. If I'm successful at the second level, it would be 0.0015. And then if I'm being aggressive, it's 0.0017. And then we would calculate what's the difference between my entry level and the risk that I'm willing to assume. And the risk is 0.0004. So I'm going to put in those values. So as from this chart, once we go to the risk versus reward, you could see that the first price point is like a 1-to-1 ratio, right? If I lose, it would be like 0.0004. If I win, it's like a difference of 0.001. But if I aim for an exit price level at 0.0154, my gain would be 0.0015. And if you compare that to my risk, that would give me a 1-to-3 risk ratio right there, right? 4 to 15, basically 1 to 3 risk ratio. So my first profit goal is a 1-to-1. My second profit goal is a 1-to-3. And if you look at the third one here, it's 4 to 17. Almost roughly 1-to-3. Let's say that's a 1-to-4 right there when you round it off. So just from planning my entry and exit levels, right? Looking both at my exit levels for profit taking and my one exit level for risk or assume losses, you can determine your risk versus reward ratio. All right. Now, moving on, we have already decided the trade time horizon, which is in the morning for a dip buying opportunity. And we are taking a long position. Over by the window for action plans, right? HenryCraig will be buying 50,000 shares of VNUE. And the planned price point is 8.0139 per share. And it's during the morning trading session. My aim is to make 9 to 33%. So that's a big range. And as I've said before, this template deepens impression through repetition. We have already decided what would be our trading strategy. So we are looking at a morning panic dip buy. Below that, there are other trading strategies such as trying to buy the morning gap up or morning spike. You could try to buy the first green day using an intraday strategy, or you could buy the first green day and hold it overnight for a potential morning gap up, perhaps a morning spike as well for further gains, right? You could buy the next day that follows the first green day, right? You could look at dip buying the stock on a third green day when it's overextended. You could look at buying breakouts. You could look at buying support levels, especially after the stock has crashed for 3 or 4 days or even 5 days, right? So in this case, we have decided to go with the morning panic dip buy. If we scroll up, you'll see that in the trading strategies window, we have highlighted dip buy morning panic using Timothy Sykes number 5 framework for penny stocks, all right? And that framework I'm referring to is once we have identified a particular chart pattern we want to trade, then we can move forward to identify the various stages of that pattern so that we can be more precise in taking targeted trades. All right. So here I'll delete the strategies that I will not be using. And is this a day trade? If I'm looking at doing a morning panic dip buy, yes, it's a day trade, and I've highlighted I'm trading in the morning. It's not a swing trade, and it's not a trade for over the weekend, so I delete those. And then what are my expectations based on my educated guess, my thesis? What are my expectations? So after reviewing and identifying all of these characteristics for VNUE, the catalyst, the indicators, the chart pattern, what's my trading strategies, what's my entry price, my exit price, what's my risk versus reward, right? What am I expecting the stock to do? All right, so after looking at the chart and taking those parameters, those indicators into consideration, I am anticipating that VNUE will have a, let me go back, will have a pullback or a correction. In other words, a crash, right? The first option is that, for example, if it was like a first green day, then I would have selected this first option. I anticipate VNUE to have a morning gap up and or morning panic. That is not the case in this instance, since the stock has run for 4 days and it is possibly overextended and it will have a pullback. So I anticipate that VNUE will have a pullback slash correction of, and you could theorize based on further evaluation of the stock, how much of a pullback in terms of percent or dollar amount that stock will take, all right? The third option is also correct. I anticipate that VNUE will have a crash, all right? I also anticipate that if VNUE experience a morning crash, it can potentially have a bounce. So my expectation is also my theory my anticipation of what VNUE will do on the next trading day based on its historic values. All right. All right, moving on. So this box right here just highlights some of the many scenarios, right, that can occur while trading this stock. However, you can narrow down the scenarios after evaluating the stock, identifying where in the pattern, what stage the stock is at, and what are the potential or actual catalysts and their impact on the price action and volume. So for example, if I'm looking at doing a first green day, right? See, that's a scenario. I'm looking at buying the stock intraday. These are some of the characteristics I want to see display by the stock. The stock is a former or recent runner with big volume and a catalyst, right? The stock is a big percent gainer with big volume, right? As the stock consolidated for days, weeks, or month. And those type of situation will help you to identify where in the chart pattern the stock is at, right? If you look at the very last scenario, if stock has been downtrending for 3 to 5 days, buy breakout at or near the previous day open price. That's one scenario. That's one way you could choose to trade this stock. Buy major support level for a potential bounce in price. All right. So these scenarios is trying to take a look at different angles. If the stock is downtrending for several days, you could look to buy the stock at its support level, anticipating the stock to bounce. And if the stock does bounce, that would give you a first green day. Now, if the stock has already bounced and has displayed a first green day, you could look to buy the stock intraday, right? You could buy an intraday panic and look to capitalize on intraday bounces. You could also buy the stock at the end of the day if it's a first green day and look to capitalize on a gap up and or morning spike on the next trading day. And as we move along and look in the other windows, you can see that I have identified other scenarios for trading. All right. So in this video, we have, as promised, determine our entry level, our exit level for both profit taking and risk management. We have determined our position size, and we have determined our trade horizon. We have also narrated our action plan. Our action plan will include our trade objectives and our trade expectation, right? Trade objectives, what do I want to accomplish on this trade in terms of profit, learning, experience, and so forth? And what are my expectations, right? Based on the historic values of the stock. Well, we'll end this informative and detailed video on creating a trading plan. On our next video, we will look at how do we review or revise or evaluate a trade after we have executed it. And the execution would both involve buying and selling. So once you buy the stock, you want to analyze what are your trading motions, what did you observe in terms of price action and volume and pattern for that stock. And after you exit the trade, you also want to do the same evaluation and more. Just to take a brief look on other aspects of this trade template, we also have Timothy Sykes' sliding scale, which helps you to further determine the quality of the stock before executing your trade so that you can have a gauge on its potential. And that's the window to my extreme left. And on video number 5 in this series, I will definitely go over Timothy Sykes' sliding scale and my understanding of it and how I apply it to my trading plan and trade execution. Now to the right, we have our trade review window. And this will be our focus on our next trade, where we'll look at how much of the volatility did we capture. And we'll also look at our emotions, our change of emotions during the trade. And most importantly, we'll look at how do we evaluate whether our trade is a good trade or a bad trade. We can't just rely on whether we lose or gain on the trade to make that be the ultimate say on defining the quality. That's just too superficial. We have to dive in. We have to analyze our emotions throughout the trade. We have to analyze how we react based on the price action. We have to analyze our entry price levels, our exit price levels. We have to also take a look at how do different catalysts affect different stocks. So it's more than just did I lose, did I win, and by how much to determine whether the trade is good or bad. And if you go further down, we have a bunch of other parameters that we can use to define how good or how bad the trade is. What is the risk versus reward? How quickly or how good did we cut our losses? What is the particular trading strategy? And how do you match that to the particular trading pattern that you have already decided to undertake? How was your discipline? What degree was your level of focus? How patient are you? Did you use the Sykes sliding scale in evaluating how tradable your stock was before taking the trade? And then finally, we'll look at some of the trading rules, strategies, and patterns that can help you to become a better trader. Again, I'm HenryCraig. Thanks for being attentive. See you on the next trade. And just to add, for advanced learning and additional resources, take a look in the description below, and I'll see you on the next video.